SD Bullion has just launched Survival Food, headlined by the only 100% organic, GMO-free survival food. Prepare like the doc. Purchase your survival food from SD Bullion today.
The Silver Bullet Silver Shield proudly introduces the new 2-ounce Freedom Girl. She's bigger, bolder, and beautiful, and available at sdbullion.com.
SD Bullion.
Metals and Markets is sponsored by DNA Precious Metals, a near-term producer of the Montauban Tailings Mine in Quebec, Canada. DNA Precious Metals trades on the OTC BB market under the symbol DNAP.
This is the Doc and Eric Dubin with the SD Weekly Metals and Markets. Well, Eric, we had another cartel bombing of gold and silver here this week on Wednesday's FOMC statement release throughout the rest of the week. And as we were discussing before the show started here, a classic cartel takedown event with the vertical decline on the exact 2 p.m. announcement, and then the real bombing occurring on Thursday's COMEX Open. The move in silver, just about $1.50 from highs to lows Wednesday to Friday, with that head fake move up on Wednesday prior to the FOMC. Silver just about touched 23.20, and then the lows today around 21.70. So a little over $1.50. Looks like silver is consolidating the worst of its losses, and which is typically pretty typical for these types of events. Wednesday, the smash down, and then the big move down on Thursday, and then recovering on Friday. Gold also touched 1360 on Wednesday, and then trading almost down to 1300 here today. So almost a $60 move in gold. Gold's the lowest it's been in several weeks here. So this is all on the Fed announcing no taper. So no indications that a taper is imminent. We're going to continue $85 billion a month in asset purchases. So what are your thoughts, Eric?
Well, if the Fed announced that the moon is made of green cheese, that would definitely be negative for gold and silver as well, too. They'd definitely be falling through the floor. We were discussing before we went on air that it used to be that gold and silver would be bombed for like a 2-day production scenario in advance and following the FOMC announcements, but now it's expanded to 3 days because we even saw the typical Tuesday morning bombing on the COMEX leading up to the following day, Wednesday, 2 p.m. announcement of the FOMC announcement. And that Tuesday, Wednesday, two-punch setup has been going on for the better part of probably like 9 years at this point, with well over 80% of the occasions where FOMC meetings were taking place. And one of these days, I'm going to go through all the trading records and document all that stuff. It's really time-consuming, but somebody's got to do it, and I might as well do it at some point. But no promises for next week, folks. But the bottom line is that these things happen all the time, and the mainstream media chooses to ignore it, and it's really just a matter of censorship by omission. And most of the financial media have as their primary sponsors the investment banks, and the investment banks have a vested interest in not having this information brought to you, the public. It's only outlets like Silver Doctors and others within the alternative news media and the gold and silver media that bring you these stories. And in fact, there's a lot of people, as we've documented in the last couple of weeks with this whole brouhaha between Jeffrey Christian and Andrew McGuire, and the weird reporting that Kitco consistently puts out. I mean, even though John Nadler is no longer with us, I wonder where he is, by the way. Somebody needs to put out one of those milk cards with a picture of John Nadler on it. What happened to John Nadler? We miss him. But nowadays their central news desk is overseen by Wyckoff, John. I'm blanking out on his first name. Sorry, folks, but his last name is Wyckoff. And on Tuesday, he totally ignored that huge crash in gold and silver on the opening of the LBMA trading, which is just amazing. And he proceeded to discuss the whole trading as if it was a non-event. when clearly that was the most important event to have that day in gold trading. So much for our so-called competition when it comes to how they accurately report the news. But, what can we say? This last year or so, basically since October, the cartel's actions against gold and silver have been pretty much unprecedented. I mean, the degree to which there's been manipulation is just unfathomable. Every time you think that they'd want to take a break because it costs, to some extent, leased gold in central banks and or the supply that they steal through arbitrage out of J.P. Morgan's vault or through the ETF vaults, you would think that at some point the cost associated with these paper games that require at least some expenditure of physical flowing eastward to justify the paper market from, or to prevent the paper market from imploding, better said, that would rise to some level where they'd say, okay, let's take a break. But, they just do not want people to perceive gold and silver as safe haven assets. It's a sad thing, and it's very hard to remain a longer-term investor and a stacker in this kind of scenario, but if you look at gold and silver as insurance, first and foremost, not as an investment, but as insurance, it makes it a little bit more tolerable. You just have to hold whatever you feel comfortable holding and leave it, because at some point there could very well be a monetary reset, and as the days proceed, as 2014 comes into view, probability for something like that in 2014 increases. I mean, it may not be 2014, but it's probably going to happen sometime in the next couple of years. So with that, that's probably a pretty good segue to jump onto that story about Finland if you want.
Big story breaking here today. We haven't, as of Friday evening here, we haven't had a chance to break it on Silver Doctors yet, but stay tuned. We'll be reporting on that over the weekend. Finland came out, responded to a citizen's effort to request here, and finally divulged information on their public central bank gold holdings. And it's what those listening to our show and readers of Silver Doctors and GATA have known for quite a while, but to my knowledge, it's one of the first public admissions by a central bank that Finland has come out and admitted that not only is 50% of their gold stored at the Bank of England, so they don't actually have it in their possession, just like Germany and a host of other countries. But the big admission, not that it's all being held at the Bank of England, but is that the other half of their gold has been leased out. And I'll read a quote here. Translated into English. Throughout these years, no more than half of the gold has been invested. Gold has been invested in, for example, deposits similar to money market deposits and gold interest rate swap agreements. Gold investment activities are common for central banks. Risks related to gold investments are controlled with limits, decentralizing investments and limits regarding runtimes. So Finland is pretty much openly admitting here that they have invested, or translation into English, leased, swapped out up to half of their gold bullion onto the market as investments throughout the year. So half of their gold has been leased out, and the other half is sitting in the Bank of England's vaults, who the Bank of England has probably leased and swapped out that 50%. So they just don't know about it over in Finland. So,
right, and just to be clear, Doc is reading a statement directly from the Bank of Finland's website that's translated through Google. And the Google translation services, it's not perfect, so when they say investment, it could very well be that the word in Finnish is lease or lent out. So, and that is in fact what most central banks do when they want to procure a small amount of interest for gold that's just sitting in the vault of the Bank of England or Sweden or U.S. or where have you. And in fact, the Bank of Finland does have some gold in the U.S. and Sweden, and it's not just only in the Bank of England. So the story just confirms what most people within the GATA camp have known for 15 years, and that's that, give or take, maybe up to 50%, who knows, and in many cases more than 50% of the central bank gold holdings of a great number of nations has already been leased out into the market. And once it's leased, it'll go to a bullion bank or whomever facilitates the trade. It's sold into the physical market, the gold may not in fact move. Jim Rickards likes to make this point all the time to people when he speaks about it in the media. More often than not, he's going to be proven right. The gold still sits in a central bank, but the problem is that gold ends up getting multiple ownership claims against the same bar. And
you might not be able to see the bar anymore. It has so many sticky notes on it.
Yeah, right. So, the trouble is that we have a fractional reserve banking model when it comes to even the central bank's gold in their vaults, and it's untenable. It's something that most citizens would be shocked to learn. But then again, a great many of the American people, even some Congress people, have been on record in media when asked the question, "Is the dollar backed by gold?" They say yes, and it's pretty darn shocking. But
and that quip about the sticky notes, well, a lot of listeners think that's just in jest. Well, it is somewhat humorous. There's been several accounts that is exactly how they do it.
Yeah, or putting sticky notes onto the cages or racks or what have you.
Right, on the shelves or holding up the gold.
Very high finance. I could just see some squirrel running in there in the middle of the night and moving notes around and get an evil grin on its face. That'd make a great video for silver doctors. Anybody want to produce something like that or have humorous videos that they have ideas for, talk to us. We'd love to talk to you about it.
Hopefully the lease is of shorter duration than the adhesive in the sticky note.
Yeah.
All right, well, getting back on the serious note here, the other story we wanted to discuss was the U.S. Mint announcing in an email alert to its primary dealers. Email was sent out yesterday afternoon, I believe, or on Thursday, that they're going to be halting Silver Eagle production for over 4 weeks. They claim it's the move to shift production from the 2013 to 2014, but it's been pretty much unprecedented for that long of a shutdown for the move over. Last year was the longest we'd ever seen, to my knowledge, and I think they shut down production on December 20th last year, and they started up again on January 7th. So it was just around a little over 2 weeks, and they've announced or informed their primary dealers yesterday that they're going to be I'll just read the statement here. The United States Mint will issue its last weekly allocation of 2013 dated American Silver Eagle bullion coins on Monday, December 9th, 2013. We will begin accepting orders for the 2014 dated Silver Eagle bullion coins on Monday, January 13th, 2014. So they're going to be shutting down production from December 9th through January 13th, so it's over a month. So look for premiums on the Silver Eagles to rise. We predicted that when we reported on it earlier today, and we've already seen that occur. Premiums on Eagles had been getting down to within probably about a quarter on the wholesale level of what they were prior to the big run-up that started around last September, October. They've jumped up about 20 cents here just intraday on Friday in the 24 hours since that statement was released. And it's fairly unusual for the primary dealers to raise prices like that intraday, outside of a rare occurrence like a $3 down day or something in silver where there's just unprecedented demand. So it's pretty rare. That's only happened a couple of times we've seen. Most of their big price moves, all the primary dealers and the wholesalers, they conduct big internal price meetings once a week, first thing on Monday morning, and then they come out 10 or 11 and release all their updated prices to all the retailers. So it would not surprise me at all to see premiums jump again after their weekly meetings on Monday as they assess the length of the Mint's shutdown, what their inventories look like. Most of them have been running pretty tight, so they don't have big inventory buildups. Demand has been pretty good. As most of our readers know, Silver Eagles are on pace to shatter the all-time sales record. So the primary dealers are not sitting around with 10 or 15 million ounces that they've ordered and can't sell. So I expect premiums to jump up pretty quickly and to remain elevated. Really, it's going to be probably 2 to 3 months on the Silver Eagles.
And that's what happened last time, too.
Right, that's what happened last time. And look, also, it'll take a little while to see the downstream effects, but look for, as Silver Eagle premiums jump and they become unavailable, the premiums will start to jump again on first the other mint coins, like the silver maples and the philharmonics, and then spread into the generic products like the generic rounds, bars, and such. We've seen that before, again, with really only a 2-week shutdown, and we're looking at almost a 5-week shutdown of Silver Eagles here in the midst of record-breaking demand. And a silver price that compared to last year, what's silver? About off 50% off of its price around this time last year, so the same investment dollars can purchase a lot more ounces as well.
Where does 90% premium stand this week? That'll be an interesting baseline for us to track going forward.
90% premiums, let me look at the update here. They've held pretty steady, but there's not a lot of supply in the market. When I say not a lot of supply, I'm talking like the 4 or 5 of the largest U.S. wholesalers have like 5,000 or less face value in stock. So, I mean, when you for your small stackers buying 100 face bag at a time, that seems like a lot. But you step back and look at it. The money in this country, that's nothing. I mean, that's one person with a couple $1 million, or not even that much, just allocating a small percentage. I want to buy up the 90%, and it's gone. So
that even furthers the argument I was going to make, and that's that we need to pay attention to 90% over the next 2 months, because it's very likely that we will, if one, we assume that silver market demand remains strong even with all of these shenanigans of the cartel painting the tape and trying to create an alternative reality in 95% of the American public's mind. If silver, nevertheless, in the American market remains strong and gets a strong bid, we will see 90% see the acceleration of its premium faster than the premium rise, maybe even in silver American Eagles, even with the U.S. Mint shutting down supply, because there's quite a few possible sellers out there with their own inventory that could come to the market and sell. So that's going to be a pretty interesting indicator. It'll give us a good sense as to what's going on organically with the hardcore silver buyer market in North America.
Yeah, and really there's only 1 or 2 dealers that have even that much. A couple of the dealers that have that much left that we're talking are kind of holding out with higher prices. They're actually selling to the dealers at higher than we're selling at SD Bullion right now, thanks to we kind of made a big purchase here recently and took advantage of a lower premium before it jumped. But so those with that have that bit of stock on hand are kind of rationing it through price. So like Eric said, look for that premium we'll see whether it moves back up here towards the $2 to $3 range that it was trading at for most of the summer before calming down a little bit here in the last month or two.
Another thing that we should probably throw out here too as well is that 2 weeks ago we spoke about how the GO Flow Rate suddenly went positive for a period of time, and it looked like that was corresponding with what seemed to be the availability of physical gold coming from leasing from central banks, and how that was able to change the price patterns in the market. Well, as we stand now, GoFo has swung once again even further into the negative. It's been negative for about 2 weeks, going out from the 1 month rate, the 2 month rate, and the 3 month rate. They're all negative now. But interestingly enough, this Friday we kicked up to negative 0.06 for the 1 month rate, which is highest it has been in the last 2 weeks. So it looks like the market is beginning to get strained with all of the shenanigans that were going on this week in particular. And this being a new month and the FOMC meeting behind us and many, many weeks before there's a delivery period on the COMEX, it's probably safe to say that we're going to see some stabilization in the precious metals markets and things drifting a little bit higher next week. The cartel has been so aggressive that it's hard to remain optimistic in any way, shape, or form, because as soon as things start moving, they just get attacked again. But statistically, November tends to be a more positive month when it comes to gold. Over the last 10 years, it's been one of the best, if not the best, performing months. And then even today, we saw in a 24-hour period, silver trying to stabilize. I mean, it's suggestive of a market that's a little bit tighter than gold, which matches up with what we understand as far as the dynamics that are coming from mine supply as well as demand around the world, and its limited capacity or availability relative to gold. So the fact that silver was beginning to stabilize today, even though gold is continuing to drift down, is also a data point that kind of fits in that whole same general direction and suggests that maybe the pain is going to be over for a while, and we'll at least trade sideways with a little bit of an upward bias going into next week. So we shall see, but that's what the data is pointing towards.
Right, particularly with the FOMC moving behind us, as well as looking for physical demand to increase here as people naturally step forward their purchases. It really is throughout the market here. When you have an announcement like that the Mint's shutting down, we've seen it before, and it's really just human nature. When you're worried that you're not going to be able to obtain supply that you need in the next week or month, dealers shift their purchases and they order ahead. Customers, individuals, investors do the same thing. They can read the writing on the wall that premiums are going to increase, so they might have funds that they were maybe looking to invest later in the year that, well, hey, if I want to buy some Eagles, I don't want to pay $4 or $5 over an ounce. I remember last year premiums went from $2.50 to $5 or $6 an ounce, so maybe I'll just make my purchase now. And really it starts to snowball, and it's really in any market like that when you get to a shorted situation where the supply cannot keep up with demand. And again, this comes on the heels this year with silver on pace to shatter the all-time record, and now the production is going to be down really for the last month of the year. So don't be surprised if Eagle premiums don't start to move up and then drag the rest of the retail silver market, at least here in the U.S., along with it. Probably a several week delay for that. So we'll also keep our eye on the GoFo rate and the trend that Eric's picked up on has continued into this week here as they remain negative. So, and you want to stay tuned to Silver Doctors and TND throughout the weekend as well for more on the Finland story and admitting that their gold reserves have been leased out and swapped, and those that haven't been are being held at the Bank of England, who likely has probably done the same thing with that 50%. So that should do it for this week. For the Eric Doombid, this is the Doc. Thanks for tuning in to the SD Weekly Metals and Markets.
SD Bullion.